Okay, welcome back once again. I want to just say one or two things on zone refinement, and I'll do my best to keep this as precise as much as possible. Sometimes, okay, let me start by reading what's on my screen. We refine zone to see the salient price action which may not be pronounced on the higher time frame. Yeah. The first goal of refining a level is to at least reduce risk and gain precision, if possible. Some persons do feel like they prefer trading the higher time frame on so on. But one thing is that when you are trading or looking at the higher time frame, not every move is pronounced. Yeah, it is not every move you can see in terms of price actions. So sometimes you you have to go to the lower time frame, though the lower time frame sometimes appears to be more noisy, and but this is what I feel, and from experience it offers you lower risk and better precision. Yeah. Now, let me just show you something. Now, looking at my screen, you will notice something. If you're actually on the higher time frame on this very trade, should I say, I don't really know what you're going to do. And if you're trying to enter this trade, believe me, you are entering this trade with quite a huge number of risk. If you will enter this trade, yeah, you will do with quite a huge number of risk. And there is every tendency, if you are using a limit order, you may be tagged in or you may not be. But now let's see this is actually the 1 hour time frame. And if I move to the next screen, you will notice something. Having refined the very setup now, which I showed us previously. Look at this setup now. It's in terms of price action, there is less precision and to a reasonable degree, a decreased predictability. Looking at it now from the 1 hour, you don't just really know what to see or where it's heading. That's why you don't blindly take trades off what you see on the higher time frame. There is always room for refinement. You have to refine this thing. Remember, we said the first goal of refining a level is to at least reduce risk and gain precision, if possible. Now, on this third slide, you will notice something. I've refined the very zone, and for my mouse, I was able to actually pinpoint the exact level that I was able to pinpoint the exact level where the imbalance was existing. Watch this. Is a fair value gap. There's an imbalance here, and the market went up, tagged in, and quickly went down. So you see, when you refine a zone, it helps you to gain a degree of precision. Yeah, and not just that, it reduces your risk. If we were to enter this trade, now okay, this is the fourth slide. If we were to enter this trade, if you watch, we'll be using a very minimized risk. Yeah, then maybe go into the 1 hour. Imagine if we're actually in the 1 hour, we will not be able to predict structures in terms of price action, and as though we'll not be able to predict only structure. Even if we try to enter the trade, our risk will be too pronounced. Okay, now you see this. Now let me come up with another picture. Now we'll look at this now. Quite all right on the 1 hour. We have this imbalance existing here. The market went back into it and so on. But you can't blindly take this trade of this very time frame. You're gonna have quite a huge risk, and if you're having quite a huge risk, you have to play in line in terms of knowing what to do to your lot size, not to risk more than is expected. And when your risk is much in number of pips, it will affect the lot size you have to use. If not, you risk more on that very trade, and you know what that means. It affects your reward. So that's why we do our best to minimize risk and go for higher rewards, because no matter what, you will hit wins and you will hit losses. But the goal in the long run, in the long term, is to remain profitable. Now, let's jump to the 5 minutes where we've refined this trade. Now, looking at the 5 minutes, having refined this trade, you will see a degree of precision. This exactness that comes to the market, that comes to the eyes when you refine it. Watch this. This is quite a huge number of risk if you were to enter this trade, and you can't even tell if it will hit or not. But when you come to the 5 minutes, you spot so many things. You're able to spot the zone, the order block, the imbalance, the change of character, everything. And you, when you are actually confined within a given trade. Now, if you watch, I've been able to show us that when refining a block or a zone, I always love doing it on the 5 minutes. Take note of this. This is a very calm, this is a salient trading secret. Take note of the 5 minute time frame. Yes, it's very, very important. Take note of the 5 minute time frame. Whatsoever structure is saying price action is doing on the 5 minutes, I take it very, very serious. Now, watch this move up, the exactness, the move up, the tagging in, and the fly down. Did you see that? Did you see that? Yeah. Okay. Now let's continue with price action. Okay. This now watch. Looking at this very image now on your screen, there's a swing high and there is a swing low. You don't really know what price action is doing. Yes, price moved quite alright, but if you were actually to take a trade, you should not know the trigger bias to hold on to or the bias to hold on to. But let me show you one more. Okay, look at this. But when you have refined it, you actually see what price has done. Yeah, there was a change of character here. There was a return to origin, and there was a travel down. 60 pip move. 60 pip move. Now, look at this again. If you look at this now, you don't really know what price did here. Yeah, there's nothing clear, there is nothing exact with price action here. Maybe if you're looking at 1 hour, if you move to the line chart, you can say there's actually a break of structure here, imbalance, a rejection bar which fill this imbalance. But that's not all. To gain better precision into what happened, we have to move to a lower time frame, and to be precise, the 5 minutes. Now we'll spot something. This is a breaker block here, the baby. Now, and this is actually a zone of interest. The market went up, created this imbalance, came back, filled it up, and then travel up. Now this is a flip zone. This is where a resistance became support. As simple as that. So I think I've said it all. When you want to take a trade, mostly when you're looking at the higher time frame, in as much as we love the bias of the higher time frame, we always want to refine our trade by reducing our risk. And to do that, you have to travel to the lower time frame to gain a degree of precision in what you intend to do. So as at this point, I think I've been able to drive home 1 or 2 points. Keep it as simple as possible. One thing that kills trading is you trying to make it more complex, bringing 1 or 2 stuffs into it. No. That's not what determines profitability. Profitability is in the simplicity of what you are doing, having your eyes on the risk first, but your heart should be on a larger bear in terms of reward. Do this for the long run. You will last in this business. You will last in this game. Thank you.